Hello everyone, how are you all? Today we are starting with our lecture number 2 with the surcharge rate. I hope till yesterday you have already studied, revised, and already made the notes. Okay, now from starting today, we are going with the surcharge rates. Now, what is the surcharge? See, earlier yesterday, we have seen that the total income is the sum total of salaries, house property, PGVP, capital gain, and other sources. This is total comes as a gross total income. After reducing the deduction from it, we got the total income, and on that total income, we have to pay some taxes reduced by the advance tax, TDS, TCS, FTC. Then it will be going to be a final tax liability. It is going to be a final tax liability. Now the government does not satisfy with that particular final tax liability. They need more over and above than the final tax liability as well. So that is what a surcharge is. Surcharge is a additional tax, or you can say tax, on the tax. Additional tax on the tax means this is the tax liability that you have to pay. Now on that tax liability you have to pay something extra. This is known as what? Surcharge. Okay, so if we are asking for something extra, so we will be charging someone who is earning extra, who is earning more. Okay, so they have given the criteria that if you are earning up to 50 lakh rupees, if you are earning up to 50 lakh rupees, then there will be no surcharge to you, there will be no applicable surcharge for you. But if you are earning from 50 lakh rupees up to 1 crore rupees, then you have to pay, just a second. If you are earning 50 lakh to 1 crore rupees, then you have to pay 10% of surcharge. But if you are earning more than 1 crore but up to 2 crore, okay, it is more than 1 crore, because up to 1 crore will be come in the this part. Okay, if you are earning greater than 1 crore but up to 2 crore, then it will be 15% surcharge in your case. And if you are earning greater than 2 crore, if you are earning greater than 2 crore, then there will be a 25% surcharge, but up to 5 crore. And if you are earning greater than 5 crore, then you will be taxed at 37% of the surcharge. You will be taxed at 37% of surcharge. Understood? Just a second. It is up to. Okay? Correct? Clearly? Now there is a twist. See, the twist is, if you are earning up to 50 lakh rupees, there will be no surcharge. This is final. If you are earning more than 50 lakh rupees but up to 1 crore rupees, you have to pay the taxes at, you have to pay the surcharge at 10% only. If you are having the income, that is a total income. We are not talking about the gross total income. We are talking about what? The total income. This is what the total income is. Okay, if the total income is greater than 1 crore rupees but up to 2 crore rupees, then there will be 15% of surcharge. And if you are earning greater than 2 crore but up to 5 crore, 25%, and greater than 5 crore will be 37%. There is no issue till here. Till here there is no issue. The issue arises from this slab. If you are earning greater than 2 crore rupees, then there is a bifurcation that you have to make. But when you have to make the bifurcation, there is the bifurcation that you have to make. If you are earning greater than 2 crore, so what is the bifurcation? Now you have to understand what is the bifurcation. Okay, in that particular case, the bifurcation, we need to understand that. So before understanding the bifurcation, first understand that there is a concept called special income. There is a concept called what? Special income. There are few kind of income which the government said that these are the income which are the special income, like the income like dividend income like income from 111A, 112, 112A. These are like what? These are like the special income. 111A is what? Short term capital gain on which STT is paid. Okay, it is a long term capital gain, okay, from land and building and both. Okay, or 112 is what? Again the long term capital gain on which STT is paid, on which STT is paid. Okay, so what are these 111A, 112, 112A? If you have already known it, okay, it's very good. If you do not know what are these sections, then we are going to go in the details in the chapter of capital gain. All these sections are a part of capital gains. Okay, but for the purpose of the sake of simplicity, or for the purpose that I have to explain you the surcharge rate, that is why I have to explain you these all things. Okay, so suppose there are special income. All these are the special income. Now the government is saying that, understand it very carefully. Now the government is saying that on these special income, the maximum surcharge rate, the maximum surcharge is 15%. You cannot charge the surcharge greater than 15% on this particular income. But suppose if my income is greater than 2 crore, but my basic surcharge rate is what, 25%, there is a problem or not? See, till 15% there is no problem. If my income comprises of the normal income as well as with the special income, there is no issue, because the maximum surcharge rate is 15% only. I can apply the 15%. But when my income increases from 2 crore rupees, it increases and goes beyond 2 crore rupees, then the surcharge rate will exceed, and it will be either 25% or 37% based on my income group, the total income. Okay, but there is a twist. Which is the twist is what, my special income can never the surcharge on the special income can never exceed 15%. Understood this particular point? So in that particular thing, what we need to do, we need to have the bifurcations. We need to have the bifurcation. Suppose, let me give you an example, the total income. Okay, suppose the example number one, the total income of an assessee is suppose rupees 10 crore rupees. The total income of an assessee is what, 10 crore rupees. Okay, so suppose I have to first see, if my total income is exceeding 10 crore rupees, means it is exceeding 5 crore, so my basic slab is going to be what, 37%. But whether I can charge 37%, no, I cannot charge 37%, because I have to see whether my income includes special income. If my income includes special income, so the maximum surcharge rate could only be what, 15%. The maximum surcharge rate could only be what, 15%, not greater than that. Now understand it very carefully. Now when I bifurcated na, I got to know my special income and my other income. If my special income is suppose 6 crore rupees, okay, and my other incomes are what, 4 crore rupees, the balance which is a 4 crore rupees. So on the special income, my maximum surcharge rate could only be what, 15%, because it cannot go or it cannot exceed 15%. Correct? Yes. But for the other income, what will be my surcharge rate? See, now for that you have to see your balance income, that is 4 crore rupees. The 4 crore rupees is lying under which slab? Is lying under which slab? So 4 crore rupees is lying under 2 to 5 slab. So what is the surcharge rate? Surcharge rate is 25%. So apply 25% of surcharge on the balance income. Do you understand this? So for the special income, it is going to be 15%. It is going to restrict on the 15%. But for the other income, you have to see the slab and check what the other income is coming into the slab. Okay, if it is coming into the 2 to 5 crore rupees slab, then it is going to be 25% of your surcharge. Understood or not? Yes. Let me take the another example to make you clear with other things. Okay. Now, yes, yes. Now, suppose your total income is rupees 10 crore. Again 10 crore. Okay. Now, if I bifurcate, the special income is going to be what? And my other income going to be what? See, my special income is suppose 1.5 crore rupees only. My special income is what? 1.5 crore rupees only. Okay, and my other income is going to be what, is going to be 8.5 crore rupees only. 8.5 crore rupees only. So see, if my other income is 8.5 crore rupees, so in that particular case, understand it very carefully. If my income is other income is 8.5 crore rupees, means it is exceeding 5 crore rupees, so I have to pay the taxes at the rate of 37%. That is a surcharge rate is of 37%. But For the special income, my maximum surcharge rate is going to be restricted to 15% only. But sir, I have a doubt. See, my special income is 1.5 crore rupees only. My 1.5 crore rupees comes under the 15% slab. Yes, so it's 15%. If you have not restricted or restricted, we do not care because it is only 15%. No, the logic is not this. The logic is what? You have to see your total income. If your total income is exceeding 10 crore rupees, now see, where you have to see the total income. If your total income is exceeding 10 crore rupees, so if the total income is exceeding 5 crore rupees, so usually you have to go to the 37% only. By applying this logic, you will say that, sir, but in the special income cases 37% is not allowed, only 15% is allowed. Then you have to allow 15%. You cannot say like this. You cannot break the chain. You cannot say special income is 1.5 crore rupees. Okay, now 1.5 crore rupees is coming under this slab, so it is going to be 15%. No, you cannot say that. If I say, if the next example, if I say, if it is not 1.5 crore, suppose it is only 0.7 lakh rupees. Now take me the example, na. Now take me the example with you. Now take me the example with you. Okay, point number 3, total income. Give me the answer now. Total income, suppose it is 2 crore rupees. Or yes, suppose it is 2 crore rupees. Special income is going to be 0.7 cr, that is 70 lakh rupees, and my other incomes are going to be suppose 1.3 crore rupees. Okay, correct. Now can you tell me the tax rate? Can you tell me the tax rate? Sir, it is up to 2 crore rupees. See, it is up to 2 crore rupees. So up to 2 crore rupees is coming under the slab of 15% itself. There is no issue of bifurcation. Where we need to bifurcate? If the income is exceeding 2 crore rupees, then we need to bifurcate. If we do not get the bifurcation as well, na, we will say that it is going to be taxed at the rate of 15% only. Both the things will be going to be taxed at the rate of 15% because the income is not exceeding 2 crore rupees. If the income is exceeding 2 crore rupees, then only the bifurcation is needed. If the income is not exceeding the 2 crore rupees, then the bifurcation is not needed. Understood or not? Because the government put the slab, the restriction of the surcharge at the rate of 15%, and up to 2 crore rupees the restriction is not breaching, it is only 15%. So that is why we are saying that when this limit is breaching, then we are reaching to the 25% or the 37% of the surcharge rate. Then we need to bifurcate it and say that a special income is going to be taxed at the rate is going to be taxed as for the surcharge at the rate of 15% only, and the balance income, whichever it is, it's going to be taxed as per this slab. Understood or not? Tell me this particular thing. Shall I ask you one more question, please? Shall I ask you one more question, please? Yes. With this, I am going to end with the surcharge discussion. Okay. This is the last question. Suppose my total income is 7 crore. The bifurcation is special income is rupees 1 crore and other income is going to be rupees 6 crore. Can you tell me the answer? Can you tell me the answer? What is going to be the surcharge rates? See, if my first step is what? Whether my income exceeding 2 crore rupees? Yes. So I need bifurcation. Yes, I need bifurcation. If my income is exceeding 2 crore rupees, so my special income surcharge rate is going to be restricted at the rate of 15%. So this is clear to me. This is clear to me. Now the balance income, that is of 6 crore rupees, whether it is exceeding 5 crore rupees slab. Yes, it is in the slab of exceeding 5 crore rupees. So what is the surcharge rate applicable to them? The surcharge rate is applicable to them is 37%. So on the income of 6 crore rupees, the surcharge rate is going to be applicable. That is a 37%. Understood or not? Tell me this. Understood? Clearly? Easy? Shall I move forward? So I have completed this particular part, that surcharge rate is what? It is the tax on tax computed above. Whatever the tax we have computed. Now on the total income after reducing the TDS, TCS, advanced tax and all, on that income you have to pay the surcharge. If your total income, the word is what? Total income, not the gross total income. If your income is up to 50 lakh rupees, no surcharge. 50 lakh up to 1 crore rupees, 10%. 1 crore to 2 crore rupees, 15%. And if you are getting more than 2 crore rupees, then you have to then you have to see whether it includes dividend, capital gain, 111A, 112A and 112. These are what? Special income. So the taxes on special income is going to be restricted at 15% only. The balance income, that is the other income, you have to see whether it is exceeding 2 crore rupees, 15%. 2 to 5 crore rupees, 20 is up to 2 crore rupees, 15%. 2 to 5 crore rupees, 25%. And greater than 5 crore rupees, so the 37% is going to be the surcharge rates. All these things have already been explained to you in this particular chart. Tell me that each and everything is explained to you in this chart. Yes. Shall I move forward now? It is easy. So the surcharge rates are also easy. Now we are coming to the tax rate for the firm, LLP and local authority. We have already seen the tax rate of individual, AOP, BOI, AJP or HUF. Now we are going to see the tax rates for the firm, LLP and the local authority. So for the firm, LLP and the local authority, there is no kind of a two regime system, that is a default or the old regime system. There is no kind of that system. There is only a blanket taxation in this particular case. If your income, that is a total income, if the total income of the if the firm, LLP and the local authority is exceeding 1 crore rupees, then the tax rate is going to be 30%, surcharge is going to be the 12%, and plus HEC, that is a health and education cess. This is evergreen on each and every kind of a tax. It is evergreen that you have to pay the 4% of the HEC as well. So if your income is exceeding 1 crore rupees and you are the firm, LLP or the local authority, then you have to pay the taxes at the rate of 30% on your income. Okay, it is going to be the slab, not the slab rate, it is going to be the blanket. Okay, 30%. Then the surcharge rate is going to be 12% on it, and then HEC is going to be 4%, which is the evergreen. Okay, so that surcharge tax rate is 30%, surcharge 12%. If the total income exceeds what? 1 crore rupees. This is how simple it is, and it is over. And it is over. Now, shall I move forward for the tax rate of the cooperative societies? The tax rate of the cooperative societies are the least used tax rates for your syllabus. In the real life, definitely it is used, but in your syllabus, it is least used. I don't think like more than one or two questions you are going to use these rates. Only two or three questions could be there in the assessment of various entities chapter. Otherwise, these are the least used tax rate. What they said that in the cooperative societies, if your income is up to 10,000 rupees, we are going to tax you 10%. We are going to tax you 10%. Okay. If your income is up to, from 10,000 to 20,000, we are going to tax you 20%. If your income is exceeding 20,000 rupees, then we are going to tax you what? 30% of rate. Okay, so see, it is 10, so 10%, 20, 20%, and greater than 20 is going to be 30%. Understood? Easy to remember. Yes. Now sir, in the firm, LLP, local authority, we have seen the surcharge rate. So what are the surcharge rates for the cooperative societies? The cooperative societies surcharge rates are equal to the domestic company surcharge rate. So whenever I will discuss the domestic company surcharge rate, I will be also discussing the cooperative society surcharge rates. Understood? These both are the same things. These both are the same thing. Understood? Now we are coming with the tax rate for the companies. We are coming up with the tax rate for the companies. Understood? Shall I move forward now? See, when I was talking about the companies now under the person's definition, are you remembering, recalling the person's definition? Tell me this. Are you recalling the person's definition? 2 cross 31. Person definition. There is a person called company, where I have said whether it is a Indian company or a foreign company. Remembering, so to tax any company, the Indian company or the foreign company, we have to apply the rates now. So rates are given. So the rates are given. Understand it very carefully now. It is very important. There are two kind of a company. First is a domestic company, which is a Indian company, suppose, and other is a foreign company. Other is a foreign company. Now first we are going to discuss the tax rate of the domestic company. First we are going to discuss the tax rate of the domestic company. They said that we have to see two things. If the gross receipt or the turnover, might be the gross revenue. If you say the gross revenue of the company in the previous year 23-24 is up to rupees 400 cr, 400 cr, okay, then we are going to tax it 25%, or the other company, otherwise it is going to be the 30%. What does it mean? Means that if your company's top line, that is the gross revenue, not, we are not talking about the income, we are not talking about the profits, what we are talking about, the revenue, that is the sales. If your gross revenue, the turnover of the company is up to 400 crore, that not in our previous year, in the previous year 23-24, means that 2 years back, if the gross revenue of that particular company is up to 400 crore, means exact 400 crore is workable, yes, then the tax rate is going to be 25%, as otherwise all the tax rate is going to be what, 30%. All the tax rate are going to be what, 30%. Understood or not? Now I have a doubt, please solve my doubt. Suppose domestic company incorporated in previous year 25-26, that is in our previous year, what will be the tax rate on that company? What will be the tax rate on that company? It is incorporated in our previous year, means earlier it was not present. So can you please tell me what is going to be the tax rate of that particular company? Whether they have to pay taxes at the rate of 25% or 30%. What is your answer? Tell me that. What is your answer? If you said 30%, then you are wrong. If you are saying 25%, then you are right. Why? Because my company is incorporated in 25-26. If my company is incorporated in 25-26, means I was not in existence in the previous year 23-24, so my gross revenue of the previous year 23-24 will be zero because I was not incorporated at that time. If I was not incorporated at that time, so my gross revenue is zero, which is up to 400 crore rupees. So I have to pay the taxes at the rate of 25% only, not the 30%. So if you understand, if you can see that any company which is incorporated after the previous year 23-24, or incorporated before previous year 23-24 but having a turnover less than 400 crore rupees, all those companies are going to be now taxed at the rate of 25%, not 30%. Okay, if the companies are incorporated before 23-24 or in 23-24 but having the turnover greater than 400 crore rupees, then only they are going to pay the taxes at the rate of 30%. Understood or not? Clear? Very much clear. Now we are coming to the foreign company tax rate. Foreign company tax rates are very easy because most of the tax rate we are going to see in the non-resident chapter. Then you will see what are those tax rates are. We are not able to recall, we are not able to remember, but that is my responsibility. I'll make you remember all those tax rates. But as of now, what you have to see, there are some words that are the royalty, FTS, okay, and otherwise. Now let me see, royalty, FTS. Then there is a royalty, FTS, and other companies. There are three kind of tax rates. Now what do you have to see? Either what we have to see that if the royalty and FTS is approved by central government, if approved by central government and up to 1976, up to 31st March 1976, up to 31st March 1976, then it is going to be taxed at the rate of 50%. 50%. But after 31st March 1976, it is going to be taxed at the rate of 20%. Otherwise, all other companies, all other income of the foreign company, it is going to be taxed at the rate of 35%. Understood? Understood? Okay. So, if the agreement, the what is the royalty, what is the FTS, we are going to see in the details in the chapter of non-resident. Right? What is the royalty? You might know the little bit about the royalty, but you don't know about the FTS. So don't worry, we are going to discuss in detail in the non-resident chapter. So if you are earning the royalty or FTS and it is approved by the central government and you are earning up to 1976, that is the previous year to 1975 to 1976, then it is going to be taxed at the rate of 50%. And moreover, in your examination, if the royalty or FTS is after 1976 only, in your examination it is going to be after 1976 only, then only it is going to be taxed in your previous year, na. Otherwise it is not going to be taxed in your previous year. Whatever the income of my previous year is going to be taxed in my assessment year. Okay, so income of the previous year will only be of 25 26, which is obviously after 1976 now. So you have to remember only 20%. Okay, for the royalty and FTS there is a tax rate of 20% only when it is approved by the central government, and otherwise all the income of the foreign company is going to be taxed at the rate of 35%. All the income is going to be taxed at the rate of 35%. Do you understand that? Now see, just read it. In case of a domestic company, the total turnover of the gross receipt for the previous year 23-24 up to 400 crore rupees, then it is going to be 25%. Other companies is going to be pay the taxes at the rate of 30%. And for the foreign companies, if you are paying the royalties or FTS which is approved by the central government and it is up to 1976 31st March 1976, then it is going to be 50%. And if it is after 31st March 1976, that is after 1st of April 2024 1976, then it is going to be 20%. And on the balance income, whatever the income it is going to be 35%. Whether we have completed all these things, shall I move forward for the surcharge rates now? Yes. Yes. Now see, surcharge rates. Surcharge rates. Okay. For the surcharge rates, we have to see there is a domestic company, there's a foreign company. And what I have said that the cooperative society surcharge rate is going to be same as per the domestic company. The cooperative society surcharge rate is equal with the domestic company. Yes. Now what they are saying, if your income is exceeding 1 crore rupees but up to 10 crore rupees, and if it is exceeding 10 crore rupees, okay. So if your income is exceeding 1 crore rupees but up to 10 crore rupees, then the surcharge rate is going to be 7% for the domestic company and 2% for the foreign company. For up to for greater than 10 crore rupees, it is going to be 12% for the domestic companies and 5% for what? For the foreign companies. So why we are charging less surcharge rates on foreign companies than our domestic companies, because the rate of taxes is higher on them now, because the rate of taxes are higher, so the base is higher. So if we charge less surcharge rates as well, then it is going to be fine. Okay, because the base is higher. We are charging 25% or the 30% at max with the domestic companies. So if we take the, we have to take the surcharge higher rates. Okay, but we are charging at the higher rate to the foreign companies, so the surcharge rate could be less. It is okay. It is okay. Understood? Clearly, this is what it is written, that if you are earning, if your total income is greater than 1 crore but up to 10 crore rupees, then 7% and 2%. If greater than 10 crore rupees, it's 12% and 5%. Understood or not? Tell me this. Understood. Shall I move forward with the concept of marginal relief? We will solve many questions. Okay, we will solve many questions in the next lecture. So till now, have you understood this or not? Now I want to move to the concept of marginal relief. But before moving forward to the concept of marginal relief, I want you to just take a minute, take a moment and recall each and everything till now. Take a moment and recall each and everything till now. Okay, let me zoom it. Just 1 minute, recall it everything. Yes. So shall I move forward with the concept of marginal relief? Now, to understand the whole concept of marginal relief, I want to discuss something with you. I just want to discuss something with you. Are you with me? Tell me, are you with me? Yes. You have to be with me, na? Concept of marginal relief. Keep making the notes with me. Keep making the notes with me. Okay. Now, the concept of marginal relief. Just understand. Can you just solve me? Just solve one question for me. Shall I give you one question? Can you solve it? Yes, you will solve it. Mr. Sham, let's do some practice now. Mr. Sham, of 85 years of age, who is a non-resident, okay, having the income of 1 crore 1 lakh rupees. Okay, he is under the old tax regime, not opted for the 115 BSE. He opted out from a 115 BSE. Calculate his tax liability. Calculate his tax liability, ignoring HEC, that is cess. Ignoring the cess, I haven't teach you what is the cess. So till now, just ignore the HEC. Before that, can you please give me the final answer of the tax liability of Mr. Shyam? Take 1 minute, give me the final answer of the tax liability. Able to solve it. He is a non-resident. Whether the age matters to me, tell me whether the age matters to me. No. If he is a non-resident, the age does not matter to me. So what I have to do? Tell me what I have to do. I have to apply the old tax regime, the 2,50,000 rupees of the basic exemption limit answer. Okay, that slab is going to be applicable here because for the NR, I have taught you now, for NR there is no age limit. If you are age of 100 years, we do not care. We'll give you the lowest basic exemption limit. Okay, tell me. Yes. So what is the final tax liability? See, up to 2.5 lakh rupees, if I have to solve it, with the pen, so for solution, up to 2.5 lakh rupees, there is a nil tax. Okay, for the next 2.5 lakh rupees, that is from 2.5 to 5 lakh rupees, there is a 5% of surcharge. Okay, next 5 lakh rupees, next 5 lakh rupees, there is a surcharge rate of 20, sorry, there is a tax rate of 20%, and above than 10 lakh rupees there is a tax rate of 30%. If you apply all these things, you will get the tax of, final answer is of what? 28, 42, 500. But this is the normal tax rate. But my income is exceeding 1 crore rupees. If my income is exceeding 1 crore rupees, then there is called what? The concept of surcharge. So the surcharge will be what? 15% if my income is exceeding 1 crore rupees, but up to 2 crore rupees, then the surcharge rate is what? 15%. So can you tell me the final tax liability ignoring the HEC? It is going to be 32 lakh rupees. 32 lakh rupees, 68,875. This is going to be my the tax liability. Understood or not? Okay. Now, can you solve another question for me? Please? Request. If assuming everything same, assuming everything same, total income is rupees 1 crore. Can you calculate the tax liability, please, for me? Please calculate the tax liability. Assuming everything same, he is a non-resident. His name is Shyam. His age is 85. What is going to be the tax liability? Tell me the final tax liability. Solve it. Follow the same method. Solve it. Yes. So what is the tax liability? The tax liability is going to be the 28 lakh 12,500 plus here the surcharge rate is what? The surcharge rate is what? At the rate of 10%. Here the surcharge will not be 15% because the income is now not exceeding 1 crore rupees. So the surcharge rate is going to be what? My surcharge rate is going to be 10% only. So my the final tax liability is what? My final tax liability is going to be 30 lakh 93,750. 30 lakh 93,750. Okay. Now just listen to me. Just listen to me very carefully. What is my increase in income? In both the cases, my total income increases by only 1 lakh rupees. From 1 lakh, sorry, from 1 crore to 1 crore 1 lakh rupees. My income increases by only 1 crore 1 lakh rupees. So from 1 lakh rupees only, and my increase in my increase in tax is going to be what? Rupees 1 crore 1 lakh 75,000 125. How it is going to be? The tax rate was, my tax was 3268 875. 3268 875 minus 3093 750. So my increase in tax is what? 175 125, and my increase in income is what? My increase is income, just a second. Yes, increase in income is 1 lakh rupees. So whether it is an injustice to you or not, tell me whether it is an injustice to you or not. Your income is increasing by 1 lakh rupees only, but they are, because of increase of your income by 1 lakh rupees, you are paying the taxes which is higher than your income, that is also that is already 175% higher. Can you imagine? It is already 175% higher. So, what does it mean? What does it mean? That your income increases by 1 lakh rupees, but because of that increase of your income, your charge rate increases, and you have to pay the taxes greater than your income. My increase is income. My income is increasing by 1 lakh rupees, but my tax is increasing by 1 lakh 75,000 125. This is unfair to me. This is unfair to me. So to curb this unfairness, in fairness, the government come up with a solution, and so government said that what you were earlier paying, if that income is not increases by 1 lakh rupees. I said I was earlier paying 30 lakh rupees, 30 lakh 93,750. Okay, so the government is saying earlier you were paying 750, and you have no problem. I said I don't have any problem, because I was ready to pay that. But just I have a problem that because of increase of my 1 lakh rupees of income, I ended up with paying higher taxes as compared to my income. My income is increasing by 1 lakh rupees, but my taxes are increasing by 175 125. Okay, so the government is saying that you have a problem na. So do one thing. Whatever additional income you are earning now, give it to us. Whatever additional income, your problem was that my increases income is less than the increase in tax, means the taxes is increasing at the higher rate, but my income is not increasing that much. I was earning the income of 100 earning the income of 1 lakh rupees, but I was paying the taxes at 175%, that is 175 125. That was very unfair to me. That was very unfair to me. So the government understood this problem, and the government said that you have a problem that this 75 125 that we are charging extra, you have a problem with that. That your increases income is less than the increase in tax, means if that increase in income is equal to the increase in tax, then you would have not said anything. What are you troubling for? You are troubling for that your increase in tax is greater than increase of your income. That's your real problem. So the government is saying that okay, no problem. Do not pay the excess tax. Pay us the income that you are earning. In additional, the 1 lakh rupees you are earning now, give us that particular tax. So earlier you were already paying 30 lakh 93,000 now, pay us 1 lakh rupees more. So now you are ended up with paying what? 31 lakh 93,750. This is going to be your final tax liability. This is going to be your final tax liability, means what we were actually charging from you. We were actually charging from you 3268 875. Okay, 3868 875. Now we are charging you just 31 lakh 93,750, means the balance of 75 lakh 125 is the marginal relief that we have given to you. The relief that we have given to you is this. Okay, which is the additional tax that we are charging from you, which is the difference of your increase in income or the increase in tax. This is the amount that we are giving you as a relief. So for that the government is saying that okay, just give me your income. Your problem was that your increase in tax is greater than the increase of your income. So okay, we are not charging the tax higher than your income. Just give me your full income. That's it. That is 100% we are charging your income. So the balance 75 125 is given as to the relief. Understood these 4 points clearly? This is the whole concept of marginal relief. I hope you have understood the whole concept of marginal relief with the help of an example. It is applicable for individual HUF, BUI, AJP, cooperative societies, firm, LLP, companies, everyone. It is going to be applicable on everyone. Okay, understood clearly. Tell me that first. Yes, can you read it first now? The question note, I'll tell you the question note what it is that. Okay, what is the question note? I'll tell you. But till now, can you please read it till here? All the steps and all the above part that you can read. Everything is simple that if the income exceeds 50 lakh rupees, 1 crore rupees, 2 crore rupees, 5 crore rupees, where the surcharge rate keeps on changing, na? In case of these individuals, okay, or 1 crore rupees in case of these individuals, 10 crore rupees in case of these individuals, a surcharge is applied to the entire amount of tax, okay, resulting in increase in tax increase greater than the increase in income. Whether do you now understand this particular line? Whether do you now understand this particular line that tax increases greater than the increases in income? Whether you got to understand by this line? Yes, so in that particular cases, whenever this kind of situation will arise, to address this issue, the assessee shall get the relief in case if the income increase in tax exceeds the increase in income. Okay, now what are the steps for calculation of marginal relief? We have seen the 4 steps. All those 4 steps is written down where we are not including the cess, but we will include the surcharge. Why we are not taking the cess into consideration? Because they are exactly same. The 4% is going to be applied, so it is same on 1 crore rupees of income as well, and it is going to be the same on 1 crore 1 lakh rupees of income as well. It is 4% as it is. Okay, so it is not comparable. We are, if we are not taking this as well na, so it is comparable as well. Okay, so there is no issue, there is no need to calculate the HEC on the 1 crore rupees of income. Then again we calculate the HEC on 1 crore 1 lakh rupees of income and get the answer and do and everything after that as well. You are going to get the same answer. But if the same thing does not have any impact, then why to take into consideration? Okay, understood clearly? Yes, so is this clear? Now, I have earlier told you that for the section number 115 BAC, I said that we will refer chapter number 9. We will see in the assessment of various entities in detail. So, whenever you see now, you'll see that the maximum surcharge rate is only 25%. The point number B, which says that under the 115 BAC, the maximum surcharge rate is going to be the 25%. Means if my income is exceeding 2 crore rupees, if my income is exceeding 2 crore rupees and whatever the income is, whether it is 10 crore, 20 crore, 50 crore, I have to give the surcharge rate at the rate of 25 only. The 37% of surcharge rate is not in the default tax regime. So suppose in the earlier part, my income was exceeding 2 crore rupees and it is 25% surcharge rate. Now my income is exceeding 5 crore rupees. 37% was the surcharge rate in the old regime, but in the new regime, tell me this one, in the new regime, if my income is exceeding 2 crore rupees, it is 25% surcharge rate. If my income is exceeding 5 crore rupees, the income is my tax rate is going to be what? 25%. The surcharge rate is going to be 25%. So, if my surcharge rate is going to be the same, so whether the question of marginal relief will come into play? No, the question of marginal relief will not come into the play. So why we are not taking the marginal relief in the picture? Because if my income is exceeding 10 lakh rupees, I am paying 30% as a tax rate. Na, the tax rate is going to be the same. Na, Whether I am earning 1 lakh rupees, or whether I am sorry, I am earning 1 crore rupees, or 1 crore 1 lakh rupees, I am ended up with paying the tax rate at the rate of 30%. And see, my surcharge rate is also going to be the same. So whether it is possible that my increase in income is greater than increase in tax, it could not be possible, because the surcharge rate is also same, because my tax rate is also same. So how it could be possible that my increase in tax is greater than increase in income? In our example, how it is possible? Because my surcharge rate is changing, but in that particular case, in the new regime, above 5 crore rupees my income, or above 2 crore rupees, my surcharge rate is not changing. So whether the concept of marginal relief will be applicable in that particular case? No. So the same thing is written here, that question note, on above 5 crore rupees in the new tax regime, there is no concept of marginal relief. Why there is no concept of marginal relief? Because the maximum surcharge is reduced to 25% only. So there could not be a case where the increases in taxes is greater than increases in income. That is why, if that is not the case, if this line will not hold true, if this line will not hold true, then the concept of marginal relief will not be applicable. Will not be applicable. Just tell me whether it is clear to you or not. It is clear. Shall I move forward? The concept of rebate. Now we are coming up with the concept of rebate. It is also very much important concept. Now the concept of rebate, for that let's come to the notes. Concept of rebate. See, in the basic exemption limit, there is a difference between the basic exemption limit or the rebate. Okay, the rebate is given under section number 87A. The rebate given under section number 87A. See, the basic exemption limit says that we are not going to tax the person with this income. Okay, if the individual's income is what, 10 lakh rupees. If the individual income is 10 lakh rupees, so we are not charging the first 2.5 lakh rupees as their income. Next 2.5 lakh rupees is chargeable at the rate of 5%. Next 5 lakh is going to be taxable at the rate of 20%. Okay, just we are not charging the first 2.5 lakh rupees of the slab. But what the rebate concept is saying, that if the income of an individual is up to, if the income of the individual is up to 12 lakh rupees, is up to 12 lakh rupees, or up to 5 lakh rupees, 12 lakh rupees in the case of new regime, 5 lakh rupees in the case of old regime, we are not taxing anything. We are not taxing anything. We will calculate the tax of that particular person, but we will give the rebate relief. We will give the relief of the rebate, and we will make the final tax liability of that person will be zero. Now how it will work? See, suppose calculate the tax of a person on 12 lakh rupees of income as per default tax regime. As per default tax regime, can you calculate the 12 lakh, the tax on 12 lakh rupees of income? Can you calculate the tax of 12 lakh rupees of income under the new tax regime? The tax on that particular income is going to be what? 60,000 rupees on 12 lakh rupees of income. The government is saying that, okay, you are earning 60,000 rupees, you are earning 12 lakh rupees, now on which 60,000 is going to be the taxes. Okay, we are providing the relief to you because I want votes from you. I won't vote from you. I want to make a voter bank from my side for my votes. Okay, so all the voter banks, all the voters, please remember that on your income of 12 lakh rupees, you were earlier paying 60,000 rupees, but we want votes from you. So kindly vote for us, and we are giving you the relief of rebate, and the rebate is going to be the 60,000 rupees. So you end up paying the whole zero. The whole zero. Tell me this. Understood? But there is a point. There is a catch. If your income is up to, if your income is up to 12 lakh rupees only, then only this rebate is applicable to you. Okay, or 5 lakh rupees in case of the old regime. Then on the old regime, if I have to say, let me just first solve that particular thing and then I'll explain you something else. 5 lakh rupees as per, as per old tax regime, 5 lakh rupees as per old tax regime, then the tax on that income is going to be, as per old tax regime, is 12,500, and the government is saying that we will give you the full relief and we are not charging anything else from you. Now, but understand the one concept very carefully. We are saying that your total income should be up to these limit, means 12 lakh rupees or 5 lakh rupees. If even it is increasing by 1 rupee, or if it is even increasing by 1000 rupees or the 10 rupees, suppose, okay, then you have to pay the full taxes. Suppose, now tell me, if your income, suppose, if income of a resident individual, resident individual, okay, rupees 12 lakh 1000, what is going to be the tax rate now? Now you cannot say the rebate will be applicable. No, the rebate will not be applicable in your case. Why it is not be applicable? Because to apply the rebate concept, your income should be up to 10 lakh rupees or 5 lakh rupees, but your income exceeds 12 lakh rupees, so the rebate concept is not applicable. You can take the benefit of the basic exemption limit and solve the answer. So as per the new tax regime, as per the 115 BAC, what is going to be the answer? The answer is going to be, my tax will be 60,150. My answer will be 60,150. This is going to be the my tax rate. Okay, see, earlier I was paying on income of 12 lakh rupees, I was paying zero, but because of increase of my income of 1000 rupees, I am paying the taxes of 6150. I am paying the taxes of 6150. Can you feel the, again, can you feel the feeling of marginal relief here? My income is increasing by 1000 rupees, but my tax increases by 65,000, so 60,150. Again, there is a feeling of marginal relief. Can you feel that feeling of marginal relief? So the government came up with the idea of marginal relief in the concept of rebate as well. In the concept of rebate as well, marginal relief is also given. Earlier, see, earlier for the purpose of surcharge, what we have seen, in the purpose of surcharge, we have seen the concept of marginal relief, where the surcharge rate was exceeding. That was the marginal relief that we were giving. Now, what we are talking about, the rebate marginal relief. We are getting the marginal relief because of the rebate concept, that on 12 lakh rupees I was not getting anything, I was not paying anything. That is why taxes was zero. But now, because of that 1000 rupees of extra income, my rebate benefit was left to me, okay, was taken out from me, okay, and now I have ended up with paying of 60,150 rupees. So they came up with a concept of what, rebate under the marginal relief, and which says that now you have to, now we will provide you some benefit. Now what is the benefit? They said tax payable, that is 6150, minus, that is 6150, minus total income is what, 12 lakh 1000, minus 12 lakh. So it is going to be my 59,150 is my final tax liability, that 1000 rupees is going to be allowed to me as a rebate. Okay, if as a marginal relief in a rebate. Understood? Simple. But there is a catch. It is only allowed in a new tax regime. For the old tax regime, there is no concept of marginal relief under the rebate. Marginal relief under the surcharge is applicable to them, but marginal relief for the rebate is not applicable to them. Understood or not? Understood or not? Now they have said that the rebate is not applicable on these income where the rates are 12.5%. We'll see. Okay, earlier it was written in the 112A that the rebate is not applicable to them, but in the 111A section it was not written. There was various kind of case laws happened. The Supreme Court, High Court, various rulings were came. Okay, and afterwards in the last year, the budget 2025, the government, the Nirmala Sitharamanji said that for the 111A as well, the rebate will not be applicable to those persons. So for the purpose of 111A and 112A, remember the in from those income the rebate will not be given to you. But the concept of marginal relief will only in the case of rebate is only applicable to the new tax regime persons, not the old tax regime. Okay, and another second thing that you need to remember very importantly, that we want the government want the voter bank na, the government want the voter bank. That's why all these benefits were given na. So who votes? The resident of India votes, not the non-resident. That is why the benefit is also given to the individual residents of India, not to the non-resident. There is no concept of rebate for the non-resident, but rather the concept of marginal relief for the non-resident is applicable. Yes, it is applicable to them, but the concept of rebate is not applicable to the non-residents. Understood or not? Tell me this. Okay, see, for the default tax regime, your income is up to 12 lakh rupees, then it maximum rate of tax is also 60,000 rupees. The same amount of rebate will be given to you. And for the old tax regime, if your income is 5 lakh rupees, 12,500 will be your income, and that amount will be given as rebate to you. Bolo. Everything is done. Now the concept of HEC and the round off, the health and education says the government is going to take it as a 4% of the taxes, okay, over and above the taxes plus surcharge plus HEC of 4.5% is going to be 4% is going to be your HEC over and above your taxes plus surcharge. What is the final figure? Apply 4% of surcharge to 4% of HEC to it. Okay, it is evergreen, applied to each and every kind of income of the tax payable. Okay, now as the name suggests, it this 4% is going to be in the field of education and in the field of health. Okay, not in any other field. Now there is a concept of rounding off. There is a concept of rounding off. So there are two concepts of rounding off. First is a total income. We need to round off the total income, or we need to round off the total tax payable or the tax payable. Simple. We do not need to round off any other thing. Remember, we do not need to round off any other thing. We are not rounding off the every heads. We are just rounding off the total income, or we are just rounding off the tax payable, not other thing. We are not rounding off the gross total income. We are just rounding off what? Total income, that is under 288A, and it is rounded off under 288B, and all are rounded off in the multiples of 10, in the multiples of rupees 10. What does it mean? It means suppose you have an income of 28,564. You have the income of 28,565. You have the income of 28,566. So if the income is 5 or 5 greater than 5, then you have to round off the upper side. If the income is less than 5, then you have to round it off in the lower side. Okay, so what does it mean? This will be what? 28,560. This will be what? 28,570. This will be what? 28,570. Okay, because it is the last digit is 5 or greater than 5, then it is upper side round off, that is 65 becomes 70, 66 becomes 70. But the last figure is less than 4, less than 5, then this is going to be the lower side round off, that the 64 becomes 60. Understood? This is what it is written, that rounding off is in the nearest multiple of 10 for both the total income and the tax payable, that is 288B. Okay, till now whether we have completed? Yes? Shall I move forward? Before moving forward, I know you must take some time to digest all these things. Okay, for the case laws, from case laws 1 to case law 5, we will see in the 1 to 5, we will see in the PGP chapter, and from case law 6, 7, 8, 9, and 10, we are going to discuss today. Okay, now just give me a second. After this, is coming to the special tax rates. Coming to the special tax rates. Or shall I make you understand the special tax rates after the break? The class is not completed yet, na? So let's start. Let's complete the whole time and then we'll take a break. Okay, the special tax rates. What are the special tax rates? Okay, see, all those tax rates what I am talking about now, is going to be dealt in the capital gain in very much detail. We are going to see each and every we are going to see the every each and every rate, that is 112, 112A and 111A, in the capital gain very much in detail. But as of now, they have given a brief idea of the special tax rates as well, because I have shown you now. See, earlier. See, if you want to digest something, if you want to link something, see, in the finance set we said the general tax rates are given, and we have seen the general tax rate. But we have said that in the income tax set there are some special kind of rates. So we are now seeing the special kind of rate, the special tax rates. Okay, so where it says your income. Okay, see, if you do not understand all these things now, it is okay, we will understand in the capital gain chapter. But can you just listen to me once? Yes. Now see, there is a long term capital gain 112A. I have said now 112 is a long term capital gain on the majorly on the land building and both. Yes. Now if it is on the transfer of a unlisted share or a share of a list a private company, okay, by whom? By a non-resident, then there is a concept of 12.5% of the tax rates. Okay, the person have to pay the 12.5% of the tax without indexation. And now what is without indexation, I don't know now. We will understand it in the capital gain. But just remember, it is going to be taxed at the rate of 12.5%. But if it is a long term capital gain on the land building or both, which was acquired before 23rd July 2024, if it was acquired before 23rd March 23rd July 2024, but sold on after 23rd July 2024, then it is going to be lower of 20% or 12.5%, whichever is lower of the beneficial. Sir, always 20% is higher than the 12.5% na? So why they are giving us a lower? Okay, but there is a concept of indexation. In 20% the indexation will be allowed, but 12.5% the indexation will not be allowed. That will make a difference. Okay, understood. Now any other LTCG is going to be taxed at the rate of 12.5%. For land and building acquired after 23rd of July 2024, then also it is going to be taxed at the rate of 12%, 12.5%, because for giving the option of lower 20% or 12.5%, it must be before 23rd of July 2024 must be acquired. Understood? Now, 112A, 111A. 112A says that the long-term capital gain on transfer in excess of 1.25 lakh rupees. If you are earning the long-term capital gain from the transfer of equity shares, equity-oriented fund, business trust on which the STT is paid, so in excess of 1.25 lakh rupees, you have to pay 12.5%. If you are earning the, suppose if you are earning the long-term capital gain of 2 lakh rupees, out of which 1.25 lakh rupees is exempt, 0.775 lakh rupees, 0.75 lakh rupees is going to be taxable at the rate of 12.5%, which is in excess of 1.7 1.25 lakh rupees. Now same for the short term capital gain, but on the transfer of equity share, equity oriented fund and businesses on which the STT has been paid, so it is going to be the 20% rate. Now coming to the 115 BB, BBJ and BB, what does it says? 115 BB means the if you are winning from lottery, if you are earning anything from the lottery, crossword puzzles, race including the horse races, card games, gambling, betting of any kind of thing, that you are going to pay the taxes at the rate of 30%. And if you are playing the games like Dream 11, okay, winning from any online games, and how it is net winnings is calculated, we will say in the TDS chapter. The net winnings, okay, the online games from which you are earning anything, you have to pay the taxes at the rate of 30%. And those income, that is section number 11E 15BB is important, where you cannot explain the money, where you cannot explain the investment, where you cannot explain the expenditure, you have to pay at the rate of 60% the tax. Out of above all, it will be surcharge, and HEC, it is around 78% that you need to pay on that particular income if you have not explained your money investment or expenditure. And what are those things and what are the unexplained money income expenditure, we will see in the next topic, that is the undisclosed sources of income, from section number 68 to section number 69. All these section is going to be usually same. Whatever they are saying is more or less is the same thing. Okay, so discussing this with discussing some miscellaneous points and then discussing with the case law will be the second part of the lecture. So now till here we are concluding the first part of the lecture. Then we are going to start with the second part of the lecture. Till now, just revise, and I know you will not going to revise at your home by your own. So, giving you 5 minutes, just giving you 5 minutes to revise the just revise these rates if you want, or just revise these notes. Okay, from the concept of marginal relief. From the concept of marginal relief, revise it. Giving 5 minutes, after 5 minutes only I am going to over this particular lecture. After 5 minutes, then we are moving ahead. Okay, and if you want, you can solve this particular question as well by your hand. Okay, solve it. Yes. So able to solve. Now we are going to meet in the next part of the lecture and we are going to complete the basic concepts and then there will be a part where we are going to solve the question and answers. Okay. So this is all for the first part. We are going to meet in the second part and complete the whole chapter concepts. Okay. Take care and keep writing, keep revising. It is very much important that you keep writing and revising on a regular basis. So revise for the first lecture as well, revise for the second half of the first half of the second lecture as well. Okay, now we are going to meet in the second part of the lecture.